Hey Kingline community, Big here. This video will recap a silver trade I took on Friday, January 30th, 2026. I'll go over what I saw, where, why, and how I entered, along with my trade management. I'll also explain an advanced structure analysis of intermediate swings. Let's look at a 1 minute chart, and this is on replay mode. And I have it queued up to about 9:30 a.m. Eastern Time, close to the New York Cash Open. And what do we see in the overnight activity? This is the Globex Open right here. We saw a sweep of the prior swing high with a move that continued lower. It swept this level, didn't quite sweep this level until later, but nonetheless, we're seeing a continuous sell-off. That gives me a pretty bearish bias, right? Then I want to take a little closer look at this structure, and this is the level that I found important. So we have a swing high here, and the move swept it, followed by a move down that not only swept the swing low, we saw a retrace, but then we saw a continuation lower. So that's an important level for me. Next, I noticed this low right here, okay? And that what it did was the move off of that low swept this prior swing high with some continuation higher. So what that does is it gives me my range. We have the low right here and the high right here. That gives me my range. So I'm going to mark up another 50% fib from the high to the low. And what do we see? Is that the retracement off of this low moved back into premium of the range, and we saw sell-off. And the sell-off broke this swing level, right, with continuation, had a retrace to test that, and with continuation lower. But this move off that level did not sweep this swing level right here, this liquidity level. And we're starting to see a retrace right near the cash open. Just as a side note, I want to show why this level found support, okay? So here's our reversal structure here. Where's the last down close in that reversal structure? It's this one right here. So I'll mark up that candle body's range with another 50% fib, and we see that support was found right there, okay? And we're seeing a move higher. So up to this point, everything to me is very bearish. So I want to see within the current range where I can get short. Here's the current range. Here's the high, and here's the low, and we're seeing a retracement back up. So I'm going to mark that range up with another 0.5 fib from the high to the low. And I'm looking for somewhere in premium above the 0.5 level of the current range to take short. Now this is where we're looking at the swing levels, okay? So we have a move back up, pretty much failure swing. We see that this level's found resistance with the move down, but the move down did not break this swing level. Then we have another move higher, okay? And the move off of that reversal does break this swing level. So that qualifies this structure as an intermediate swing, okay? Intermediate swing is where a higher high is created, and then a retracement, and then the following move sweeps that high with the move in the opposing direction that sweeps a higher time frame swing level with continuation lower. This intermediate swing level tends to be a higher probability of providing resistance. So I want to look at that structure just like we did earlier and see where the important candle is. Once I identify the important candle, that's going to give me my short entry. Here's the last up close candle, okay? That's my important one. So I'm going to mark up a fib, 50% fib, just using that candle body's range. This level at 101.090 is going to be my short entry if price does retrace and test that level. Okay. Let's advance the replay mode now and see how it turned out. The cash open has a strong rally. Sweeps the prior swing high over here. Little retracement. The move higher. Test my level. And there's my entry. It was right at about this time where I posted in my channel at about 9:53 a.m. my entry. Okay. So I originally entered at 101.090. I had a limit short order resting there for one contract. Then what I saw was over the course of the next minute or minute and a half that we printed a long upper wick. So I marketed in an additional short contract, okay? My stop loss was placed at or above the prior swing high, which is our intermediate high here at 101.585. And I had two targets, okay? Because I believe in taking partials, especially on silver, okay? And having two contracts instead of one gave me a lot more opportunity to secure profit before my final target, okay, which was the liquidity level mentioned earlier. I chose 99.695 for two reasons. One is it's the midpoint of the last down close body's range right here, and it also lined up with prior support resistance level as shown multiple times right here. So the thought was that while price did move in my favor right here, and I do have a very strong bearish bias, I don't really know how things are going to play out, and I want to make sure that if price does move in my favor after my entry, that I can secure profit. This is the first level of possible support, so I chose that. Let's continue the replay and see how it plays out. Remark up my liquidity level. That's my final target. Really strong move at first. Great move. Speed it up a little bit. Get a little retracement there. A little deeper retracement. So now we create another intermediate high here. Let's see if that's respected. Yes, it is. First move is the best. And boom, there's our target. And finally, to recap that trade, let's look at the stats. Entry was at 101.135. My stop was at 101.585. So I'm accepting a risk of 0.45 points. My drawdown on that was 0.26. My target was 96.44. That gives me a reward of 4.725 points for an 11-hour trade. Thanks for checking out this video. I hope you guys found it useful.